Hello team, welcome to the Market Minute. Today is December 5th, and we're staring at a little bit of green on our screen, and we're staring at a 10-year that has broken through 4.2. That's a big deal. We're below 4.25. We're staring at 4.195 as we're staring at it here, and we're obviously at the lows of the month, very lows of the last 3 months actually. So we're kind of back where we were at the beginning of September. That's kind of a big deal. Taking a look at pricing, we're seeing anywhere from 20 to 5 basis points, depending on the coupon. But the good news is we've shifted down in coupon from the 6.5 down to the 6 is our kind of production coupon now, since that's above par. That's a big deal. And now we're starting to look at that 5.5 coupon potentially getting to par. That's a big deal for that next rate stack to open up. Now, why? What happened today? Well, it's JOLTS. JOLTS jobs report come out about job openings that have come out, and that has lowered. That just basically means that potentially this tight labor market is loosening just a little bit. And that's a big deal, because we've been talking about the employment picture and inflation are the two things that are really driving the Fed's decisions right now. And employment's a big deal. And this week has tons of employment data. So we have the JOLTS report today, which was a big deal. We have the ADP jobs report, private sector job report coming tomorrow, and then the BLS jobs report coming on Friday. So if we have continued misses, we'll say, because if it's a less than forecast number, you're going to see bonds rally. If we see a miss, this can continue. Do I see us getting near 4% and breaking through 4? Potentially. There's a chance there. I will say there's been a lot of buyers, and there's been a heavy move. Just 5 weeks ago, we were sitting at 5% on the 10-year. So in just 5 weeks, we've moved down this 80 basis points in yield. That's a lot. So I would say there's definitely some pent up selling potential. I mean, the Fed has come out and they've talked. We've seen Jerome Powell come out and talk, saying, hey, maybe we're not even done with hiking, let alone cutting rates. But this consensus is cuts are coming. This jobs report falls in line with that. They're seeing 100, maybe even 125 basis points of cuts in 2024, mostly towards the tail end of the year. But this is kind of starting to paint that picture. So we'll see what tomorrow and Friday bring. I'm still recommending locking like always. I would say locking because there's a potential. If there is a beat, if there is a jobs beat, this massive move that we've seen over the last few days or the last week, that might reverse a little bit here. So we're sitting at the best levels we've been in a while. Definitely recommend locking, and then just keep your eye out for these jobs reports. If tomorrow is kind of a flat report, this can continue or at least stabilize, and then we'll see what happens on Friday. And Friday, we always know, is a big heavy volatility day. So a lot of volatility this week. Keep an eye on those employment numbers and lock them if you got them. Thanks, everyone, and we'll talk again tomorrow.